Welcome to the Capital Gains Tax Solutions Short Series podcast. I'm your host, Brett Swarts, and we're here to help you escape feeling trapped by capital gains tax jail. And we're studying taking a peek at how the wealthy can beat Biden's capital gains tax hike. We're on a series here. Our last video, we covered the income tax advantage and how the Deferred Sales Trust is like an IRA. So if you haven't seen that, take a peek. It'll be on a playlist, on this entire playlist on our YouTube channel, and or go back on iTunes or Spotify, wherever you listen to the podcast to learn more about that. So this particular episode, we're covering how President Joe Biden's capital gains tax proposal might impact investors, okay? So first thing to understand is the capital gains tax proposal for the Biden administration would raise top capital gains tax rates from 23.8% to 43.4% if you include the Medicare cert tax, okay? Now, they state that it only applies to those with income over $1 million. So let's kind of dive into that. Is this proposed capital gains tax hike really only for the select few rich people? Or perhaps is it for what we refer to or known as the one-time wonders, such as those who've owned businesses for 10, 20, 30 years, and this is their entire nest egg to be able to retire on, and they've built it up, and their plan was to sell and be able to live off of the income from the net proceeds. And so we don't know how they're going to classify if it's your income from prior years, or right now as it's written, it says current years. But the question is, will this capital gains tax from your sale also be included in your net income? And that's kind of the unclear portion of this. And I'll give you another example. So if you could sell a business, but what if someone bought a house, let's say in the 1970s, let's say they bought it in Silicon Valley, Palo Alto, bought it in Atherton, or bought it in some place that had it was a very low price, and now it's shot up over a couple $1 million. If they were to sell, even though they're on a fixed income of $100,000 per year, but they sell, let's say, for $3 million, as all of a sudden they're going to make $3 million in that year, and therefore they're going to have to pay this higher capital gains tax. We don't know. The details are still being ironed out, but it is important to plan and have something in place in case these proposals do come out. And by the way, here's a little quick survey for you too. What states do you believe will be the proposed highest capital gains tax rates in history? And this is what this is proposing to do. There's 3 states, okay? California, New York, and New Jersey. Now, in order, the lowest of these 3 is New Jersey. New Jersey coming at 54.1% would be the combined state and federal capital gains tax rates. California comes in at second place at 56.7%. And in first place is New York City, coming at 58.2%. So if you're in any of those states, or any states for that matter, realize that this proposed capital gains tax rate is something to take seriously and to consider a plan right now. Of course, we love the Deferred Sales Trust, and we want to show you how that can be a solution to capital gains tax deferral, income tax deferral, also for estate tax planning. You can go to capitalgainstaxsolutions.com. We're also streaming on expertcresecrets.com as well. So if you're a business professional who's helping your clients buy and sell real estate or businesses, we encourage you to learn about the Deferred Sales Trust and to help them escape feeling trapped by capital gains tax, and so you can grow your business and so they can create and preserve more wealth. Hey, thanks for watching this video. Please rate, review, and subscribe. We appreciate everybody out there in the YouTube, iTunes,